Nathaniel, great to get you on Investing Africa with us. So let's just talk about your approach right now to the continent and investing in the continent, especially if you take a look at the macro picture and a lot of the headwinds that investors are facing. How does that change your approach to the continent?
Firstly, good day, Jennifer, and thank you very much for the opportunity. Delighted to be here. So as far as 91 is concerned, we've been investing in the continent for over 2 decades. In fact, 3 if you take some of the South African businesses into account. And really over that period, we've managed to really refine the way that we go about investing. I think first and foremost, I think we all understand the economic opportunity, 2.8% of GDP, global GDP, 18% of the world's population that's likely to double just within our lifetime. Now, obviously, what that means is a significant demand for basic infrastructure, for goods, for services that all of these consumers demand. At the same time, there's precious little capital that's really flown into Africa if you compare it to the global picture. And so as a result, there's a supply-demand mismatch that gets created, and we're really sitting on the supply of that side. So our ability to negotiate strong terms with our underlying investment companies is really part of the key to the success. I think something else that I'd say is we believe we've cracked the secret sauce to putting vast amounts of capital to work on the African continent. And part of that answer is private credit and infrastructure investing, which is really at the heart of what it is that we do.
Talk about that, Nathaniel. Why private credit? Why do you think that is the secret sauce that's worked?
Yes. Yeah, sure. So first and foremost, private credit and infrastructure financing allows you to go anywhere. So companies don't have to be listed. We understand how shallow the capital markets are in Africa. And this really allows you to play both across the public and the private space. It allows you to fund businesses that are in the financial space, infrastructure, materials, mining, consumer businesses, service businesses. So really the range of opportunities is far, far broader. We think certainly where a lot of international investors and allocators have stumbled in the past is that they've thought of Africa as a very risky continent, which, I mean, we understand that it's got political risk like many other geographies globally. But really, instead of aiming for the extremely high returns, possibly backing VC and private equity, where those 20% plus dollar returns are a little bit harder to come by, private credit at a much more manageable rate of return, but obviously very defensive, actually provides the perfect solution for these investors who are really just looking to diversify their portfolios and get a nice low risk and consistent return under their belt.
What sort of sectors are we talking about when you say defensive then, Nathaniel?
Sure. And again, a good question. I think, once again, the world likes to allocate and invest by top down, by what specific geographies, what specific sectors. Whilst we think some of those are relevant, we really try to turn it onto its head. If you think of infrastructure, for example, it touches many, many sectors. If you think about each underlying business and what their needs are. And so really we think of it more along the lines of you need diversification. So we focus typically on the, let's say, top third of the African geography. So of the 54 countries, really trying to focus on those top 15 or so to get really good, nice, deep diversification. But then we really look to back things which are going to provide key goods, key services, key utilities to underlying consumers and people across the markets. That ultimately, we believe, is our ultimate line of defense, relevant businesses that are hungry for capital. And so sustainable infrastructure is a big part of that. Everything from renewable energy to telecoms and data access, financing subsea cables, all the way through fiber networks into data centers, towers companies, mobile network operators and the like. Ports is another big part of it as well. And so that's one big area. Financial inclusion is another big one for us. So certainly providing access to finance where it either currently doesn't exist or just big businesses that we can back across the board, big financial services businesses that dominate their markets where we can provide some capital into and help them grow. Finally, strong asset quality. So ultimately things like collateral really in private credit and infrastructure financing is pretty key. So really making sure that you've got something of value ultimately at the end of the day.
But Nathaniel, How do you exist within the macro space, though? Because there are still a lot of challenges. I mean, one of them being FX headwinds, what is happening with trade tariffs and the implications for currencies globally. How do you navigate that?
It's a critical question, and it's also partly why we've come to this conclusion of private credit and infrastructure financing as one of the real key asset classes for the space. Again, as I mentioned, some asset classes have struggled trying to target 20% plus in dollars over the period, only to be very exposed to local currencies which have come out of the pressure. I would say that is by far the most inherent risk that Africa poses relative to possibly the rest of the globe. And so really, when it comes to private credit and infrastructure financing, a lot of that is dollar-based. So there are businesses that are fairly resilient to those FX challenges. However, if we just go one step further, we are ultimately financing only a portion of the capital structure. And so it actually becomes quite an affordable concept to the underlying borrower. I'd say over and above that, rather than charging a business that's only growing at 10% or 15%, trying to charge them 20 or 25%, which is just completely unsustainable. We found that if you just de-risk that position and you still charge a business 10 or 12% in dollars, they're able to make sure and make their payments and ultimately deliver us returns. So we've invested a couple of $1 billion over the past decade, and we've grown those dollars and we've monetized those dollars. So it really is an asset class which is covering itself in glory at the moment. It's still early stage as far as Africa is concerned. Europe and US, it is really kind of, I would say, flavor of the month at the moment. But it has some wonderful attributes to both investors and to the borrowers themselves.
Fascinating. We'll see where the space goes, but we'll leave it there for now. Nathaniel Micklem, the co-head of Emerging Market Alternative Credit at 91. Nathaniel, great to speak with you. Thanks so much.
Thank you so much, Jennifer.